All right, everyone, buckle up. The crypto universe is on fire, and we've got the hottest updates hitting you faster than a lightning-fast transaction. Get ready for a rapid-fire rundown of the news that's shaking up the financial world. We're talking about massive price predictions that could redefine wealth, groundbreaking tech that's making waves, and strategic moves by industry giants. You absolutely do not want to miss what's happening right now. From major financial institutions setting ambitious targets to innovative ventures launching into the stratosphere, the pace is electric, and the insights are game-changing. Stay locked in because the future of finance is unfolding before our eyes, and we're here to break it all down for you. Let's dive into the headlines that everyone will be talking about. First up, get ready for some eye-watering numbers as we explore the projected fair value of a leading digital asset, with predictions reaching astronomical heights. Then, we're shifting gears to explore a revolutionary new way to gain exposure to a major cryptocurrency through an innovative platform, promising unique yield opportunities. This development could redefine how investors interact with digital assets. Next, we'll dissect the delicate dance between short-term market fluctuations and the robust long-term institutional confidence, pinpointing those crucial entry points for the coming months. Understanding these dynamics is key for strategic positioning. And finally, prepare for a major announcement from some of the biggest names in the crypto space as they launch a significant venture aimed at building the very foundation of the future financial ecosystem. You're watching Bitcoin Bulletin, and we've got it all right here, right now. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. A bold forecast emerges. Prepare for numbers that could redefine your understanding of digital asset value. JPMorgan has just dropped a bombshell, reasserting its bullish stance on Bitcoin with a fair value estimate that's turning heads across the financial world. This isn't just another prediction. It's a deeply researched forecast suggesting Bitcoin could be on a trajectory toward $126,000 by the end of the year. The foundation for this ambitious target is built on several key observations. A notable decline in Bitcoin's volatility, bringing it closer to traditional safe haven assets, and a significant surge in institutional adoption, primarily driven by the overwhelming success of Bitcoin ETFs. These exchange-traded funds are not just a trend. They're a powerful new avenue for both institutional and retail investors to gain exposure, consistently pulling in over $80 million daily and accumulating a staggering 1.29 million BTC. This sustained inflow signifies robust demand and a growing conviction in Bitcoin's long-term potential. Further bolstering this optimistic outlook are projections for 2026, with analysts painting a picture of even greater heights, potentially reaching between $120,000 and $562,000. These forecasts are underpinned by several powerful catalysts, including the upcoming halving event, which historically reduces the supply of new Bitcoins, and an increasing regulatory clarity that is making digital assets more palatable for mainstream adoption. Furthermore, the trend of corporations adding Bitcoin to their treasuries continues to grow, with companies like MetaPlanet and KindlyMD expanding their holdings, signaling a strategic shift in corporate finance. Despite this positive momentum, the market isn't without its watchpoints. Recent data indicates a slight cooling in U.S. institutional activity, although demand from Asian and European markets remains strong. Additionally, significant whale movements, with over $112 million in Bitcoin changing hands in just 48 hours, have tested key support levels around $113,000. However, Bitcoin's resilience above these levels suggests strong underlying demand is absorbing this supply without triggering a major sell-off. Investors are also keeping a keen eye on macroeconomic indicators, such as U.S. GDP and the Federal Reserve's monetary policy, which could influence short-term price action. The upcoming PCE inflation data is particularly crucial for gauging the Fed's next steps. The market is buzzing with discussions about whether Bitcoin's current consolidation is a temporary pause or the calm before a significant upward breakout. Analysts are closely monitoring the interplay of institutional inflows, whale activity, and macroeconomic signals to determine the optimal entry points for the remainder of the year and beyond. Hold on, because the narrative around digital assets is constantly evolving. Next, we're diving into a groundbreaking development on the Solana network that could revolutionize how you earn yield on Bitcoin. A new yield frontier on Solana. Get ready to explore an innovative intersection of blockchain technology and traditional digital assets, as a new player emerges on the Solana network, promising a novel way to gain yield-generating exposure to Bitcoin. This development, centered around LBTC on Solana, aims to create a new paradigm by leveraging Solana's high-speed, low-cost infrastructure to offer unique financial opportunities for investors. While the specifics of LBTC, likely referring to a tokenized or wrapped version of Bitcoin, and its yield-generating mechanisms are still unfolding, the underlying concept taps into the growing demand for decentralized finance, DeFi solutions that can provide attractive returns on digital assets. The integration of Bitcoin exposure onto a platform like Solana is significant. Solana has established itself as a high-performance blockchain capable of handling a large volume of transactions with impressive speed and efficiency. By bringing Bitcoin onto this ecosystem, projects can potentially unlock new use cases, such as decentralized lending, borrowing, and yield farming, all while benefiting from Solana's robust architecture. This could mean more accessible and potentially more profitable ways for investors to earn yield on their Bitcoin holdings, moving beyond traditional staking or lending protocols. The potential for yield generation in the crypto space is a major draw for many investors. As DeFi continues to mature, innovative mechanisms are constantly being developed to maximize returns. A platform that can effectively bridge Bitcoin's established value proposition with Solana's dynamic DeFi environment could attract significant attention. This could involve collateralizing tokenized Bitcoin for loans, participating in liquidity pools, or utilizing other DeFi primitives to generate passive income. The success of such a venture would depend on several factors, including the security of the tokenization process, the stability of the yield mechanisms, and the overall growth and adoption of the Solana ecosystem. As the digital asset landscape continues to diversify, opportunities like LBTC on Solana highlight the ongoing innovation within the crypto space. Investors are keenly watching how these new platforms will integrate established assets like Bitcoin into emerging blockchain ecosystems, potentially unlocking new avenues for wealth creation and financial participation. The focus will be on the security, efficiency, and sustainability of these yield-generating strategies. Stay with us, as the strategic positioning in this dynamic market is crucial for navigating the path ahead. Prepare yourself for an in-depth look at how short-term volatility can be managed against a backdrop of long-term institutional optimism. Navigating volatility for long-term gains. In the fast-paced world of digital assets, a critical balance must be struck between managing short-term market fluctuations and capitalizing on the powerful long-term institutional bull case. As we look towards Q3 2025, understanding strategic entry points becomes paramount for investors aiming to maximize their returns while mitigating risks. The current market sentiment reflects a complex interplay of factors, including macroeconomic influences, regulatory developments, and the ever-present volatility inherent in digital assets. While short-term price swings can be daunting, they often present unique opportunities for savvy investors who can look beyond the immediate noise. The institutional adoption of Bitcoin, marked by the significant inflows into ETFs and increasing corporate treasury allocations, provides a strong foundation for long-term growth. This institutional interest signifies a growing acceptance of Bitcoin as a legitimate asset class, capable of providing diversification and potential hedging benefits. However, this growing acceptance does not eliminate the inherent volatility. Factors such as shifts in monetary policy, geopolitical events, and even sentiment-driven trading can lead to rapid price corrections. For instance, recent economic data releases and Federal Reserve commentary have created uncertainty, impacting short-term price action. Strategic entry points are often found during periods of consolidation or minor pullbacks, which can occur even within a larger bullish trend. Identifying these moments requires a deep understanding of market dynamics, technical analysis, and a keen awareness of the macroeconomic environment. Investors might consider dollar-cost averaging (DCA) strategies, which involve investing a fixed amount at regular intervals to smooth out the impact of volatility and reduce the risk of buying at a market peak. Alternatively, setting specific price targets for entry, based on support levels and historical price action, can provide a disciplined approach. Furthermore, the narrative around Bitcoin's scarcity, driven by events like the halving, continues to support its long-term value proposition. As supply growth slows, increased demand, particularly from institutional players, is expected to drive prices higher. However, the path to these higher valuations is unlikely to be a straight line. Investors need to be prepared for periods of sideways movement or even temporary downturns. The key is to maintain a long-term perspective, focusing on the fundamental drivers of adoption and value, rather than getting overly fixated on daily price movements. Market participants are actively debating the optimal strategies for navigating this environment, with many emphasizing the importance of risk management and a well-defined investment thesis. The ability to distinguish between temporary noise and significant trend shifts will be crucial for success in the coming quarters. Prepare yourself for a significant announcement that could reshape the very infrastructure of the financial web. We're about to reveal how crypto executives are launching a major initiative to build the future of finance. Building the financial Web3 infrastructure. A significant development is underway as a group of prominent cryptocurrency executives has launched a $200 million special purpose acquisition company, SPAC, Bitcoin Infrastructure Acquisition Corp. Limited, with the explicit aim of acquiring and developing businesses crucial to the Web3 financial ecosystem. This ambitious venture, planning to list on the Nasdaq under the ticker BIXIU, signals a major push towards consolidating and building out the foundational layers of the decentralized financial world. The SPAC's focus is squarely on critical areas such as digital asset custody, decentralized finance, DeFi protocols, and the burgeoning field of cross-border payments, all sectors poised for substantial growth as institutional investment in digital assets continues to surge. The leadership team assembled for this SPAC is a testament to its serious intentions. It includes key figures like Ryan Gentry, formerly of Lightning Labs, a company instrumental in developing Bitcoin's Lightning Network, and Vikas Mittal, a managing member at Meteora Capital and a veteran of previous successful crypto-related IPOs, including the public listing of Bitcoin Depot. This caliber of leadership, combined with a board comprising former executives from industry giants like Kraken and Bitcoin Magazine, brings a wealth of experience in navigating both the technological complexities and the regulatory landscapes of the crypto industry. Their collective expertise is geared towards identifying and integrating businesses that are essential for the maturation of digital finance, such as wallet providers, exchanges, lending platforms, and innovators in tokenized financial instruments. The strategic decision to form a SPAC underscores a broader trend: the increasing flow of both institutional and private capital into the digital asset sector through alternative public market vehicles. SPACs offer a streamlined route for promising crypto companies to access public markets, allowing them to capitalize on the growing demand for exposure to this innovative industry. Bitcoin Infrastructure Acquisition Corp. Is positioning itself to be a key player in this trend, aiming to leverage its financial backing and industry connections to foster the growth of essential Web3 infrastructure. The company's filing highlights the ongoing digitization of financial services as a primary driver for its investment strategy, recognizing the transformative potential of blockchain technology in reshaping how financial transactions and services are conducted globally. This initiative is not an isolated event. It mirrors a growing wave of SPACs targeting the digital asset space, collectively raising hundreds of millions of dollars. These endeavors collectively signal a strong market confidence in the long-term viability and growth potential of the crypto and Web3 sectors. The SPAC's management team's prior experience in structuring deals within the Bitcoin ecosystem and managing crypto-centric investment strategies further solidifies its commitment and capability. By focusing on core infrastructure, this SPAC aims to play a pivotal role in building a more robust, secure, and efficient financial future powered by blockchain technology. Market observers are closely watching how this $200 million SPAC will deploy its capital, anticipating that its acquisitions and strategic investments will significantly contribute to the development and mainstream adoption of Web3 financial services. And that wraps up our deep dives for today, but don't go anywhere yet. We've got a lightning round recap of all the major stories and a final call to action to keep you connected. And that wraps up our deep dives for today, but don't go anywhere yet. We've got a lightning round recap of all the major stories and a final call to action to keep you connected. First, JPMorgan is forecasting Bitcoin's fair value at $126,000, driven by ETFs and declining volatility. Second, a new LBTC initiative on Solana promises innovative yield-generating Bitcoin exposure. Third, we explored strategic entry points for Q3 2025 amidst Bitcoin's short-term volatility and long-term institutional bull case. Finally, crypto executives launched a $200 million SPAC to build crucial Web3 financial infrastructure. If you found this information valuable, smash that like button, subscribe to Bitcoin Bulletin for more market-moving news, and ring that notification bell so you're always ahead of the curve. Follow us on all social media platforms to join the conversation and stay connected. Thanks for watching, and we'll see you in the next one.